Okay, that is all about gold and silver. Okay, gold and silver. But what is the return of gold and silver? What is the return of gold and silver? Come. For bond, we know that there is coupon rate, interest rate, and for stock, you know that there is a valuation, price to book value, and you know when the price hit net asset value, you sell it. You know the return. Theoretically, you know the return. Correct? But how about gold and silver? What is the return for gold and silver? Nothing. Zero. I also, when it comes to this slide, also look at the fundamental. I look at the chart because I have no basis to calculate the return of gold and silver. Not like stock, I can do some valuation. But gold and silver, I can't do any valuation. It's more on demand and supply, market demand and supply. So what I can do is I base on the chart. This is for the past 30 years. Past 30 years. Okay, past 30 years. Okay, not long enough. Okay, you can get 200 and 300 over years of chart. But I think should not take a very long history because things change, economic change, structure change. Okay, like for example, after 1976, gold is no longer pegged to US dollars. That is structural change. And to me, the chart before is not much meaning to the current economy or current price of gold. So I think I take 30 years. And silver, how about silver? Same. Yeah, same. Correct. Almost same. Almost same. Because gold and silver, they have same characteristic, and also people think that they are same. It's just a different in value. So it's almost same. Okay. How about gold to silver ratio? Sorry? There's a spread. Yes, correct. So just to take note, the highest is at for almost $50, but today price is about $15. So drop already. Same for gold. Highest is at around 1,900. Now it's about 1,200. And gold and silver ratio. This is the ratio. Gold and silver ratio for the past 30 years. It's fluctuating. Okay, fluctuating. So it's not that gold and silver really go in tandem. But you can see maybe average 60 ratio. Okay. I didn't do much on research on whether now is it uptrend or downtrend. That one is not my circle on competency. That is not my strong point. Up and down, all these things you do yourself. You do yourself. Okay. So how am I going to forecast, or not forecast, sorry, tell you the return of gold and silver? Not forecast, not forecast. Yeah. I use cumulative annual growth rate. This term, CAGR. You all learned this term before, right? Only one person. Okay, very good. How about the rest? CAGR, you know, right? Annual return, compounded annual return. I think like a compounded annual return. So what I do is I take the price from first year until 30 years, and then I divide into 30 years to take a compounded return. That is best that I can do for you. And it turns out that gold 4.8% per year from 30 years ago until today. If you hold it 30 years ago until today, every year you get 4.82%. That is the meaning. Okay, silver about 3.62%, provided you hold for 30 years. Okay, 30 years is a bit too long. Nobody hold except for 30 years. Trust me. So we look at 5 years. 5 years. So 5 years ago, you bought gold or you invest in gold, and you sell it today or you hold it until today, you get 0.91% per year. And silver, negative 3.38%. Okay, but I put an asterisk mark here. First is because past returns are not indicative of future performance. So must have a disclaimer. If not, I hope I buy today, next year must give me 4.82%. No, sorry, this is only past return. And how about this double asterisk? Because it's this from January 2010 until January 2015. And also depend on which period you are taking. Which period you are taking. You are taking from maybe 2005 to 2011, then this is positive return. So this is indicative only, depend on your years that you invest in gold and silver. Okay, just for your information, because I really can't forecast or calculate the return for you. Okay. So I think 3 to 4% for gold and silver in long term wise.